What if the first crypto you ever owned cost you nothing to acquire? Not a dollar, not a cent, just time, intentionality, and the knowledge of where to show up before everyone else does. That is not a pitch. That is a documented, real, currently operating framework that more than 18 million Americans used in 2024 to accumulate crypto without buying it directly, a 340% increase from 2022, according to Chainalysis research. And most people watching this channel who are already deep in the XRP and XLM and HBAR thesis have never applied a single one of these methods because this video was never marketed to them. It was always marketed to beginners. But here is what nobody explains. Earning zero capital crypto is not just a beginner's game. It is a systematic accumulation strategy that compounds alongside whatever you are already holding. Every dollar of XLM or HBAR you earn without spending a dollar of your own capital is a dollar that did not come from selling time, did not come from your paycheck, and did not require you to reduce your core position. It is additive. And when you understand the full picture of how to do this correctly in 2026, the number it adds to your portfolio over 12 months is not trivial. Let us go through every legitimate method from the smallest to the most significant and be honest about what each one actually yields in real terms. The first and most beginner-accessible category is Learn and Earn programs. The concept is simple. A blockchain project or exchange wants new users to understand what their network does. Instead of paying for traditional advertising, they pay users directly in the project's token to watch short educational videos and answer basic quiz questions. The exchange benefits because educated users are more likely to become active. You benefit because a 5-minute video pays you in crypto. Binance runs periodic Learn and Earn campaigns with limited reward pools that open and close. The rewards vary by campaign and are paid in the token being featured. The important nuance is that these campaigns are first come, first served, so the people who have alerts set and move within the first hours of a campaign launching consistently capture more rewards than casual browsers. Bitstamp, via its Robinhood platform integration, runs a Learn and Earn program through its Learn Center. You read an article on a topic and complete a 5 to 7 question quiz. The reward is approximately $2 in the featured token per quiz. KuCoin runs its own Learn and Earn campaigns with varying reward pools. Probit runs structured educational courses with rewards ranging from approximately $1.25 to $15 per course, depending on the campaign. Realistic expectation across all Learn and Earn programs in 2026, someone who monitors all available platforms and completes every available campaign as they launch can accumulate between $50 and $150 worth of crypto per month. This does not require any technical skill. It requires a system. Bookmark every active platform, set a calendar reminder to check for new campaigns every Monday and Thursday, and treat completion as a non-negotiable 15-minute weekly task. The compounding effect over 12 months of consistent participation is $600 to $1,800 in accumulated crypto, from zero capital. The second category is airdrops. This is where the numbers get dramatically larger, but where the approach has changed so fundamentally in 2026 that most of what people think they know about airdrops is wrong. The old model was simple. Follow a project on Twitter, join their Telegram, submit your wallet address, receive tokens. That model is dead. What replaced it is far more powerful for people willing to engage correctly. Modern airdrops in 2026 almost universally use one of two mechanisms. The first is a points system, where your accumulated points from interacting with a protocol determine your allocation when the token eventually launches. The second is a retroactive airdrop, where the project takes a snapshot of wallet activity on a specific date, and every wallet that used the protocol before that snapshot receives tokens proportional to how much and how consistently they used it. The retroactive airdrop model is the one that has generated the most documented wealth creation from zero capital in crypto history. In September 2020, Uniswap distributed 400 Uni tokens to every wallet that had ever interacted with the protocol before the snapshot. At claim time, that allocation was worth approximately $1,200 to $1,400 per wallet.
The person who had simply used Uniswap to make one swap months earlier, with no knowledge that an airdrop was coming, received that allocation as a complete surprise. Arbitrum's March 2023 distribution delivered approximately $1,500 to over $10,000 per wallet, depending on bridge volume and ecosystem activity. These were not accidents. They were the predictable outcome of a structural pattern that repeats every time a major protocol without a token reaches critical mass and decides to distribute governance rights to the people who actually used it. The methodology for positioning for the next retroactive airdrop in 2026 is documented and actionable. First, identify protocols with significant venture backing and real usage that do not yet have a token. In 2026, MetaMask, with over 30 million active users, is explicitly exploring a token launch. Base, the Layer 2 network built by Coinbase, has had its creator confirm they are exploring a Base network token. Backpack Exchange holds a regulated license from Dubai, raised $37 million from Multicoin Capital and Jump Crypto, and serves users across 150 countries without yet having a token. Polymarket, the prediction market platform, is anticipated to launch a token in the coming months. Each of these represents a real, well-funded protocol being used by real users who will likely receive retroactive rewards when the token eventually launches. Second, understand what modern retroactive scoring systems actually measure. They are not measuring how much money you moved through a protocol. They are measuring consistency over time. A user who interacts with a protocol once or twice a month for 8 months will almost always qualify for a higher allocation than someone who makes 50 transactions in a single week and disappears. Projects now build their scoring around time-weighted activity models, precisely because this filters for real users and blocks the automated farms that plagued earlier airdrops. The practical implication is that you don't need significant capital to qualify. You need a routine. Bridge a small amount to Base and make 1 or 2 transactions per week across different dApps. Use MetaMask for swaps across different networks once a week. Interact with Polymarket's prediction markets with small amounts. Build on-chain history that looks like a real user, because real users interact consistently over time, not in a single burst. The third category is referral programs, which represent the most scalable zero-capital earning method for people who have any existing community, audience, or network.
Every major exchange runs a referral program. Binance pays a percentage of trading fees generated by referred users in perpetuity. Coinbase pays both the referrer and the referred user a bonus upon the new user completing their first qualifying trade. Kraken runs similar referral structures. For someone who runs a YouTube channel, a WhatsApp crypto group, a Twitter account, or even just a social circle of people who are curious about crypto, the referral income compounds over time as the referred users remain active. The important distinction is between referral programs that pay in platform-specific promotional tokens versus programs that pay in liquid, tradable assets like Bitcoin, USDT, or USDC. Always prioritize the latter. The fourth category is crypto cashback programs. These programs allow you to earn a percentage of your everyday spending back in cryptocurrency without changing your spending behavior at all. Coinbase's debit card currently offers 0.5% back in crypto on every purchase. This is not a dramatic return, but on someone who spends $1,500 per month on everyday expenses, it generates $90 per year in crypto without any additional behavior or investment. For someone already holding XRP and XLM and HBAR as their long-term thesis, $90 additional in crypto per year from purchases they were going to make anyway is a genuine add to their accumulation that required exactly 0 behavioral change. The fifth category is content creation and community engagement rewards. Multiple platforms in 2026 pay users in crypto for creating value for their ecosystems. Kaido AI runs a platform called Yap, where users earn Yap points for contributing meaningful content to the crypto conversation on X. These points are converted into token allocations. The mechanism rewards quality analysis, thoughtful discussion, and community building rather than volume of posts. For someone who is already deeply researched on XRP, XLM, and HBAR and is already engaged in crypto communities online, this is capturing value for work that is already happening.
Several Discord-based community programs run crypto rewards for active, valuable community members. Governance participation on live DAO protocols often generates token rewards for voting. Layer 3, Zeely, and similar Quest platforms aggregate task-based crypto earning opportunities across dozens of protocols simultaneously, allowing someone to complete structured challenges across multiple ecosystems in a single organized dashboard. Now, let us talk about the one thing the internet almost never tells you about zero-capital crypto earning, because it sounds boring. It is boring, but it is the thing that determines who actually builds a meaningful position from nothing and who spends years doing the activities without accumulating anything real. Compounding strategy. Every dollar of crypto you earn through these methods faces an immediate decision the moment it arrives in your wallet. Spend it, trade it into something else on a whim, or treat it exactly the way you would treat any other crypto allocation, with the same conviction, the same cold storage discipline, and the same long-term framework that drives your core XRP and XLM and HBAR positions. The people who earn $200 worth of XLM from Learn and Earn and referral programs over 6 months and immediately convert it to XLM on their hardware wallet are not the same people who earned $200 and spent it on something they were going to buy anyway. The first person has built real accumulation. The second person has generated spending money. Both did the same activities, only one built wealth. The final critical piece is scam avoidance, because the zero-capital earning space is saturated with fraud at a rate that makes every other crypto category look safe by comparison. 3 rules that eliminate 95% of scams instantly. First, no legitimate airdrop, giveaway, or earning program requires you to send cryptocurrency first, ever, for any reason. The moment a program requires a deposit to receive a reward, close the tab immediately. Second, no legitimate program requires your seed phrase or private key. A seed phrase request is a wallet theft attempt dressed as an opportunity. Third, be skeptical of programs promising disproportionate returns with no clear revenue mechanism. The programs that pay $5 to $15 for 20 minutes of educational engagement have a clear business model. The programs promising passive income of hundreds of dollars per day from a pool you cannot verify do not. Use only official URLs typed directly into your browser, not links from social media posts, Telegram messages, or email. Verify every airdrop opportunity against the official project website and official social media accounts. Use a separate wallet for airdrop and testnet activities, not the same wallet where your long-term XRP and XLM and HBAR holdings live. This creates separation between your high-conviction long-term position and the exploratory activity of earning programs, and eliminates the possibility of a compromised airdrop interaction affecting your core holdings. The realistic 12-month picture for someone who executes this framework consistently looks like this. Learn and Earn programs across all platforms generate between $600 and $1,800 depending on campaign availability and how quickly they act when new campaigns launch. Retroactive airdrop positioning from consistent use of pre-token protocols, including Base, MetaMask ecosystem, and others, generates an unknown but historically significant potential payout. Referral programs from any existing audience or community generate between $0 and several $1,000s, depending on the size and engagement of the network. Crypto cashback from everyday spending adds $30 to $150, depending on monthly spend. Content and community rewards add a variable but real supplementary stream. None of this is a replacement for the core investment thesis. None of it generates the returns that come from holding XLM from 16 cents through a full cycle, but all of it is additive to that thesis. Every unit of XLM or HBAR accumulated from zero capital is a unit that did not require selling time to earn, did not require reducing conviction in your core position, and does not need to be sold to recoup any investment because there was no investment to recoup. That last point is the one that changes how you hold. When you paid nothing for something, the psychological pressure to sell at the first profit is structurally different. You can hold longer, think clearer, and compound more effectively. Zero capital, real crypto. The only requirement is the system. Not financial advice. All earning activities may be subject to tax in your jurisdiction. Keep records of every acquisition, date, amount, and fair market value at receipt. If this video gave you a framework you hadn't seen assembled in one place before, hit the like button right now. Subscribe if you want strategy and accumulation frameworks alongside the market analysis. Your comment question this week: which of these methods have you already been using, and which one are you going to start this week? Drop it below. That conversation is where this community actually builds knowledge together. Stay systematic, stay accumulating. The compounding doesn't care whether the capital was yours to begin with.